Good day, everybody. Brian here from quantlabsnet.com. It is May 10th today, Saturday. I wanted to show you the now process that I'm using that seems to work really well. Being able to take a set of reports that are AI generated. These are all pre-made by a variety of Python scripts that I've created. That goes from a set of reports to a general summary report, and then turning that into an actually potentially live trading dashboard with the appropriate strategies for it. So let me walk you through this. First of all, number one is I am purposely choosing the asset classes of both futures and options. Very simple. Futures is where the big boys play, especially in the boutique, frequency shops, the hedge funds. They all are active in this space, not just doing individual stock or crypto now, but the traditional big time firms are focusing mostly on future products, future asset class, on top of combining that with another asset class of options on futures, not options on equity, options on futures. I've talked about that numerous times. The data is expensive. Getting access to the option chain is important. So in the last few weeks, I've included potentially every virtual major U.S. based future out there, ranging from in the financial. I have now included currency like the yen, the euro, gold, now Ethereum and Bitcoin. I could add Solana and XRP, but I have to let activity be built up on the exchanges of the CME, Chicago Mercantile Bank, to build up the activity, and then I can add in both Solana and XRP will be added in, I think, this week, actually. So that's what we can do. So we can get a set of reports generated between 37 to about 52. So on average, close to 50 are generated. And this is what each report will look like, but this is the end goal. Okay, so what here is you're looking at is a simulated trading dashboard that I can create within, if you know how to prompt it, know what to feed it, be able to generate a live trading strategy for just specific portions of a proposed portfolio. So in this case, we would have $40,000 allocated. We have cash available, and this is now running. It could be as a high frequency trading. If I wanted, this is Python based. It's just easier. You also want to lose less money, but still be active, being medium frequency. Here, among this little sub portfolio, we have various. I'll show you this in a minute. But these are the available asset classes: soybean, gold, Nasdaq, S&P, blah 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 blah. Okay, and then here are the appropriate strategies based upon what comes out of those reports, and I'll go into more detail on the strategies, and they're specific for what's suggested in the report. Again, all is 100% generated by AI. Here we can allocate different types of strategies available: hedge speculation, directional, pair trading. We could do manual trades here, and we can also have our active option chain for whatever reason. And again, this is all simulated data. Okay, so let me see if I'm always having problems with this, but let's see if this will load up. No, this doesn't update. But it's uh, a basic portfolio dashboard. I can go as sophisticated as I want, but this is just where we go to. So again, everything I've talked to starting in this video is 100% AI generated. Where what you're looking at is AI generated. The goal here is to create 3 of these dashboards. Okay, so let me show you the reports again. So in these reports, we have a variety of, let's say 50 that this thing will generate. Let me show you, usually ES is the most popular right here. So let's take a look at I'll provide an individual report in the post, in my blog post on this. Okay, so here we are. So right here, this is the ES futures and options. This was generated yesterday on the 9th of May. Again, this is just all simulated data, all for demonstration purposes, not to have, there's dumb idiots out there that will go out and actually trade using this as an idea. You lose a ton of money on this. All the things that this generates will tell you be very careful. You can lose a lot of money. So just this is for demonstration purposes only. Okay. Anyways, so here the number one thing we look at is volatility. What we want to have in this crazy volatile environment is to ensure we use and have low volatility. 19% is kind of low on an annual basis. Here it'll generate last 5 days, okay, 5 working days. So here we have our chain data, the volatility with our standard risk-free rate. I'm not going to go into the details. Here's a simulated option chain. Again, this is the expensive part to get actual data. Once I get the actual data for option chain in these commodities and features, I'll be golden. This will be 100% accurate. Okay, so in here we are also all about correlation against the futures market and the options market. Um, so this is all forward looking. Okay, so it'll go out and simulate all the Greeks, all the different types of Greek analysis. We measure call put parity. Again, I've talked about this is very important for the equilibrium on this asset. This is what most likely high frequency trading firms will look at to see if there's an in equilibrium between the call and the put in the imbalance. And that's when they go in and trade. Risk frontier. We look at all of the different available option strategies we have. They could be bullish, long put, long option. Then it goes into the bearish strategies. These are all the payoff diagrams, all full detail. Could do neutral strategies. Then we can get into more sophisticated things like iron condors, iron butterflies, hedging strategies, and the like. Okay, so we can do this for every single asset I just showed you in the futures market. We also set a futures floor price for our downside risk. We have payoff diagrams that we can generate. Very, very important. The plots may look weird, but what's really more important is the data. And again, although it's simulated data, the futures data is accurate. You can easily get that through, I'm using interactive brokers, but it's the options to chain data that's very expensive to get that through a systematic way. Then it starts to look at the arbitrage opportunities. Then it starts to look at all types of different ways to analyze this. If there's an arbitrage there, it will specify what our golden area should be when we're assigning the different options out there. We're looking at hedging, the different effectiveness of it, blah, 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 on and on it goes. Um, and then the hedging is important if that's what you want. This only really works on bigger accounts. Um, so all of the data here, it just goes on and on and on. Okay, call options, put options, does a full-on analysis of each and every one. Okay, and then it'll do applying the Greeks and all of the different types of analysis. That's the complicated part. Okay, so there's that. So when you look at, we have now virtually, let's say in this case, 47 assets to choose from for both futures and options trading opportunity. From there, what we do is we can feed back into the AI all of those documents, all of those reports, as I call them, and put them into a file, into a summary. Okay, so there's different LLMs I could use with different analysis, but there's one that I like. So this is a sample of what it will generate here. Um, this one here. So this will go through the entire thing. I'll make this one available. Um, and let me see if I can find the full on. Yeah, this one right here. So this is over 15 pages of full on analysis. Again, generated by AI based upon all of the documents I gave, all of those reports, right? So it can get pretty crazy. So these are all of the available. Out of that, it only focused on 15 of them, okay, that are worthy of trading. So then it will look at volatility, arbitrage opportunity, hedging opportunity, using the put call parity as one of the indicators. Then it'll say, okay, overall, we're looking at the different overall strategies we can use if we gave it, let's say, $100,000 to choose from all of those reports to come up with a general type of strategy for both futures and options, combining them. Okay, so then it will say, okay, dedicate 15% of the capital for arbitrage, and it picks out those assets based upon what's presented. Then we can do maybe hedge speculation. Again, same thing. It'll suggest those assets as well. Then, if we want to go specifically into option strategies, we could trade based upon volatility. This one always comes up. Both Bitcoin and Ethereum come up because they're the most volatile. Or we could go after stable or volatile assets as well. In this case, it's usually currency, so it could be Canadian dollar or Japanese yen. Depends upon your risk. Also, we could do directional. And if we just want to do income generating, cover calls against long future or cash secured puts for desired entry points. So again, this is 100% generated by AI. So if I tell it, okay, here's $100,000, what would you suggest I do? So here it goes, okay, well, obviously we've got to diversify across different asset allocations, be it metals, energies, agricultures, financial, and currencies. In here, what you'll notice here, this is the important one, it's not focused entirely on the stock market or entirely on the crypto market. It's full on uh, different diversification across many different sectors. So then we have to worry about the allocation. So and this is based upon different strategy types. So 15% arbitrage, hedge speculation, option strategies, or just sitting on cash reserve. Okay. So then I can ask it, okay, give me a forward guidance. Now I'm using ARIMA as my predictions. Again, it might be better if I just give it the data files, not just the general report, to have this be 100% accurate. Originally, when I came up with this and having those individual reports for the gold, for the ES, and all that, I was going to provide that to users, but I thought, oh, this is not going to work because no one's going to really go through that. But it's using only those Word documents as the data for when I feed it into my prompt. Okay, so here I'm putting it through, and if I gave it actual data for each individual uh, asset, this reporting would be much more accurate. Okay, um, so here it's kind of giving you advice as well what to do and what not to do. So dynamically generated but not real payoff input should be ignored for specific strike selection. So it's giving me not just um, the what should do, but it also gives me the rationale, and this is part of the reasoning in some of the LLMs now, where it will go in and reason with the data and say, do this, but don't do this because of that, because of the reasoning now built into the models, the AI models or LLMs, that where they're at. So that's how advanced AI is now. So now it's going to talk us into the uh, futures with a simulated, let's say $100,000. Okay, you really can't do a whole lot with $100,000, right? I mean, you're very, if the smaller the account, the more restricted you are in doing things with these type of strategies. Just to put that out there. So here we could focus on future contracts, options, hedging, arbitrage. Those are usually the four areas we could focus on. Okay, and then out of that, it will come up with a methodology on how to build out these types of strategies. So here it mentions it's going to use all the different types of data extraction out of the reports. Usually it's going to be the option chain data with the Greeks, the implied volatility, put call parity, the hedge math, arbitrage analysis, and so on. So then out of that, with the reasoning of AI, it can then generate the thematic grouping. Okay. So it could be based upon metal, energy, agriculture, financial, currency, or crypto. This is amazing. This is the most advanced I've seen it yet. Then it will look for and state the options. Okay. Okay. So do we do arbitrage? Do we do hedging, volatility, and what it looks for? And it explains it. Then it will tell you, yes, we will have some constraints here based upon what I feed it. Payoff diagram is one thing, right? So again, I'll say this is not feasible because of that. Again, if I provided the raw data instead of just these visual reports, I'd get much, much better accuracy. Coming up with it, I might do that. So here, it comes up, and what the firms will do is they'll build out these themes, these strategy themes on how to deploy this cash. Okay, and then there's going to identify the opportunities and the conditions set from those various reports. Okay, so the number one thing I'll usually look at is volatility. So we know there's going to be some high volatility. Just so you know, there could be Ethereum and Bitcoin, um, and also some other metals. And then I'll measure out the low volatile instruments, which would be these mostly currency and treasury. Then I'll measure out the volatility skew, okay, and all the opportunities there. And then I'll go out and identify if there's any arbitrage opportunities and what to arbitrage against what. Sugar, copper, gold, ES, 2-year note, euro, and so on. There's other ones, but this is probably out of that lot, these might be the best ones. And this is just from one day analysis. I could do this the next trading day and every day to do this. Okay. So here it will also go out and measure the options via the put call parity, which is really the crust of how options trading is built out. And this is all institutional level. This is not like what you get on some random YouTube channel or just general Yahoo uh, stuff out there online. This is real institutional level stuff. Okay, so it's going to measure out the put call parity, build out the option arbitrage, and it'll identify which ones can be arbitraged. Um, and then we can also use hedging with the optimal ratios. Okay, those are hedging ratios as well. So I'll focus on those with the variance reduced. Like this is just unreal. And that's going to do a lot of quantity stuff in here. Okay, I'll just leave it at that. And then it's going to start focusing on the low variance ones and the not NAN, meaning probably not enough data out there or volume to really focus on, or just something not right in the data file or the reports. And then it's going to talk about if there's any discrepancies to warn you, you can lose money here. And what happens after that? It's going to start to come up with a plan on what you should do with the available opportunities sitting in front of you with the AI reasoning based upon the data you gave it and all the info I gave it. It will come up with a potential profit. Can you imagine? So if you're trading gold under certain conditions, we might come up with $63. Again, this is all fake data. It's simulated data. Okay. So then if you are working with like a highly big multi-billion dollar institution like Cargill that would do this, where they're in livestock, you're going to have storage costs, you're going to have all kinds of costs against that. You need to be aware of that. And then again, it's going to go out and do the put call parity um, as well and actually explain it to you, conversion. Okay. Blah, 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 blah. This is just beyond impressive. So we have the option futures synthetic arbitrage. This is what I've talked about, what a lot of firms do. Um, Applications. So this can be done in SB, silver, call put premium difference versus a future strike price difference here as well. And I could go further developing this. Okay. I could go on and on. Here's some hedging it's recommending, blah, 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 blah. Option specific um, as well. So if I wanted to just play in the option space, I could go after high volatility ones. Again, Ethereum, Bitcoin. natural gas, and so on. Here it's suggesting maybe the best one to work with, a long straddle. Also, maybe do a calendar spread if I want to do low volatility, which it again, this you'd run this depending upon what age you're at. If you're in your 20s and 30s, you have lots of like runway to go aggressive and do these more higher risk strategies as you can afford to lose money. In my case, when you're closer to retirement or later on your golden years, you're going to want to do low volatility. So these are the ones you're going to focus on, and it actually will define what kind of strategy you should do. Sell a call and a put. Profitable in the underlying remains range bound, iron condors, blah, 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 blah. Okay, very powerful stuff. So we could do also directional spreads. Okay, so it's just giving you suggestions on what to come up with. But here, as an example, we're going to exploit a volatility skew. Okay, report consistently show puts have higher IV than calls. So a measurement of calculation, right? Blah, 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 blah. Okay, so then it's going to also use time indicator, theta, and those strategies as well. That's going to give you actual numbers of what you should look for as well. So just for learning this is powerful. So then we get into the portfolio allocation and risk management that we would apply in a like $100,000 account in a portfolio of 100,000. Again, mock simulated, right? So here talks about, you got to worry about your risk tolerance, market conditions, so on and so forth. So everybody's different. Now the question will be, can you do this under 10, 20,000? You'll see it in the allocation. So here it's going to talk about, and again, I talk about this is very important. If you're going to be online as a guru and you're not able to quantify and qualify your trading ideas, I hate to tell you, you're not very effective at your job. Here, it fully explains qualitatively what you need to do, okay, and why. So you diversify, blah, 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 and it talks about liquidity, transaction costs, blah, blah, blah. This is the core of it right here. This is the core, okay? So we're near the end here, okay? So this is what you do if you have 100,000. So let's say you only had $20,000 to your name and trading. Maybe you could just focus on this one right here, 15,000. Focus on cash futures, arbitrage, put call parity, arbitrage. So that means you can trade based upon the signaling from the reports with gold, ES. You could also do the E mini as well at 109 and the silver as well. Okay. So here is giving us potential profit right here. And the AI is calculating that for you. Okay. That's pretty powerful. On top of that, what it's going to do, it's going to say, okay, here's the strategy. Allocate 5,000 to 2, 3 such opportunities when live conditions minor report signals. Rigorously calculate cost of carry and transaction costs. These opportunities are short-lived. Okay, so we're like the one I just showed you is this one right here, $40,000. Okay, so this is the one I fed into the AI to come up with the actual Python source code with the HTML front end, which I'll go into detail again, which I already showed you on what it will do. So I fed this into the AI and say, on top of that, please build me blah, Python, HTML, all that fun stuff, and specifying what I want in that dashboard, right? So here with 40,000, we're taking a directional position instrument where futures hedging is reported as effective or engaging pairs trading. So here, what it's telling me as suggestion, and again, this is only simulated for demonstration purposes only. Yes, I have to say that this many times. So here we can do a long CL with a hedge, future hedge. If bullish on CL, take a long position, blah, 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 hedge ratio, blah, blah, blah. Long cash position, go long on this, okay, on 3.3 future contracts, okay, and then it's using that covariance or short if positive. So you allocate $15,000 for that. Here on a soybean ZL futures hedge, bearish on ZL with a high variance reduction, 75, 361%, and a hedge optimized optimal hedge ratio, allocate 15,000. Pairs trading. So now it's telling me long ES, short NASDAQ. Based on perceived relative mispricing or divergence from historical spreads, allocate 10 grand. This requires analysis beyond the individual report. So again, I could build a separate trading system, trading strategy, trading bot just on this one opportunity right here. Okay. And I only allocate 10 grand and see how that goes. On top of that, we go really specific on options if we feel dangerous at 30,000. So 30% of that 100K, obviously. So here it's saying we're going to focus on volatility plays, uh, directional spread, and exploiting the skew. Again, I'm no genius here, but the AI is. This is what it's suggesting specifically what you should do. Okay, this is how advanced this is. Long straddle on Ethereum or natural gas if anticipating continued increase large price swings. Allocate 7,500, 2 to 3 small positions, high cost, high potential, risk reward. Okay. So it's warning you, yes, it's high reward, high potential, at a high cost. Also, you could do an iron condor on Canadian dollar or Japanese yen, low volatility, if expecting continued range bound movement. Define risk with spread width, allocate 7,500. Risk reversal on silver and exploit the skew. This is amazing. Given the put implied volatility, call implied volatility. If bullish in silver, sell on OTM out of the money put and use proceeds to buy an out of the money call. Allocate $7,500 with a bull call spread, bear put spread on 1 to 2 selected instruments where moderate directional view exists. Specific agriculture like ZC or metal like an HG, which is copper, allocate $7,500. And then also it's saying sit on a cash reserve of 15K out of the 100,000 with the margin requirement needed and new fleeting opportunities better against to the adverse movements. Okay, so now it's going to forewarn you on the risks with the risk management. And again, let me remind you, I can code generate all this. I can code generate this. I could vibe code it. So right now we're at 40,000. We're down $680. Looks like it's coming back up. This is all random, just so you know, obviously, being on a Saturday. You can imagine if you get the real data, right? And what it's suggesting here. This is the power of what we're looking at here. It's right here. Okay, so uh, yeah, so let's look at the overall risk here, right? So we have to worry about position sizing and 2% of 100,000. Always apply stop losses, right? So I didn't put that. I didn't put that in the um, into the request to generate the Python, the code, but I could have. Um, so let me see if we have here, right up here. We were up here. Okay, so obviously it talks about diversification, leverage management, which is very important because people get blown out here, and obviously we're going to regularly review it with this dashboard I just talked about. So again, everything you need to worry about is not looking at past data, past conditions. We have to always look at forward-looking guidance. Okay. Um, in obviously futures and options is that it is forward-looking, and we need to have various consideration. So this is the warning right here. This is working off of simulated data, real-time data. Warning. Okay. We also have to worry about transaction costs and slippage. And then the ARIMA predictions, which cannot, well, don't put a lot of effort into that, but I'm just using it as a guide to compare apples to apples with all the different 50 reports. And this big warning here, dynamically generate but not real input data, again, because it's fake data. Volatility, structure, and skew, okay, another warning. And then there's the row, liquidity, okay. That's probably one of the reasons why it's only picking the higher volume data because of liquidity. Obviously, continuous learning, all that. So here, obviously, the warnings, cash futures mispricing were also noted. Um, Prominent and consistently flagged opportunities lie in arbitrage, particularly stemming from widespread call put parity violations. Again, that's why the high frequency trading shops focus on that. That's their bread and butter. Um, okay. And then we have to, obviously, for 100,000, carefully vetted arbitrage strategy, we have to worry about speed, low cost, all that. And then again, specific instruments mentioned, gold, ES for arbitrage, gas, ZL for hedging, Ethereum, high volatile, uh, plays Canada dollar for low vol are illustrative purposes on the report snapshots. In live trading, the trader must continuously scan for these conditions across preferred universe of instruments. Okay, so there you go. Forward looking is not about predicting prices, but about being prepared to apply these strategy frameworks when similar conditions, be it arbitrage opportunities, specific volatility profiles, or effective hedging parameters, manifest in the live dynamic marketplace. Robust risk management, diligent real-time data analysis, and an adaptive mindset are critical for translating these theoretical insights into sustained profitability. So you can't just let this run on its own. You have to watch it. So this is what we watched. Again, all generated. This is, to me, this is really impressive um, to be able to do this. Okay. And here's all the different active positions that are open right now. They're all losing. Here's the transaction history. Nokia and L not updated for whatever reason. But um, yeah, I'm blown away that we're able to do that. So again, for people that don't understand the AI, everything I've talked about in this is 100% AI generated. Okay. Really important. So where do we go from here and what are we going to do? Okay, so with my website, quantlabsnet.com. Okay. If you're really into this, want to know more, sign up to my newsletter. You have to engage with the newsletter or you don't get anything with it, meaning open click. And that's the key to continue getting it. You can go into the Learn tab. All your info is not um, released to anyone. You have here this ebook that's already out. More than, I don't know, couple hundred, about 700 people have already downloaded it. Um, and that's a free ebook that you'll get as well. And yeah, so what's going to happen is a couple things can happen here. I have various groups, so these are all chargeable now. There's different groups here we can deal with. We have the quant finance group where I can put in the reports that I've just shown you into this group and make it payable. This one's the more important one if you want to know the source code that's generated and be able to see it and use it. And it's all Python and HTML for now. I don't see the purpose at all. Everyone wants medium frequency and everyone wants Python because it's easier to understand. Um, so there's that. So I'll be able to put that code frequently into this section. Okay. So that is how it's going to be. I'm also going to offer for now, people come to me with trading ideas and it's going to be, I'm going to treat it like a donation, minimum. You want to talk to me, you want me to do something for you, you have to join this membership. Okay. That's, I'm not going to mention price here because this is my base video to promote this, so it could change. It'll obviously will go up. But if you want your trading idea implemented, you have to join this. Okay. Um, because if you're going to take on the code, you have to know how to maintain it as well, that coding base. So that's important. So we'll leave that for now. Okay. And yeah, that's all I can tell you. But it's very exciting to be where we're at. All right. Thanks for watching. Have a good day.